S&P 500 is still moving in one of the strongest bull market that I've seen in a long time. For all the moving averages stacking on top of each other, 5-day, 13-day moving averages, 20-day moving averages sloping upwards, and of course we have the 50-day moving average right here. Now I did mention to you guys that we do have the bearish divergence here. Move it up a little bigger. We do have a bearish divergence. We got this high here, over here. The SPY went up even higher, but the RSI did not. Now I mentioned yesterday that just because we have a bearish divergence doesn't mean SPY has to make a significant pullback, although the setup is there. SPY is at a resistant level. It's struggling to break that resistant level, plus the bearish divergence. So a lot of signs are pointing to the down direction. I get it. However, look at the 5-day moving average. I've mentioned to you guys that sometimes in a strong bull trend, the 5-day moving average does not get hit. Like these two candles right here. It happens all the time. But every now and then, the SPY would come back and retest that 5-day moving average like it did right here. But it doesn't just come right to the 5-day. It drops just below it, just like right here, right there. It even happened here. It's happened there. So many times more often than not when it's in a strong bull trend. And what happened? It dropped just below our 5-day moving average, and boom, it continued to move up. So looking at this chart, trading above all the moving averages like this, I see a bullish chart, and it's definitely consolidating. All right, that's 3-4 days in a row it closed above this 5-day moving average. So I believe that we will head to the area of liquidity. I have the 440 price target right up here. I think we will break this. I don't think we should be bearish just yet. July is a very, very bullish month. We got earnings coming up, and you know what happens when we got earnings. SPY it moves up, guys. It's happening right in front of our eyes. I don't know what else to tell you. If you choose to be a bear in this bull market, like, I don't know how. Looks like the bears are losing right now, okay? So I want you guys to be on the right side of the trade. Looking at the put to call ratio, we still have a lot of people betting to the downside compared to how many people betting to the upside. So if retail traders have a 95% failure rate, I don't want to follow the retail crowd, right? So majority is betting to the downside, despite this being one of the strongest bull market. Okay, it doesn't make sense to me to be a bear just yet. Okay, so remember, I always mention the areas of liquidity. So just the areas just below our moving averages, I consider them areas of liquidity where a lot of retail traders will leave their stop loss, because a lot of retail traders, they will trade with the moving averages. I am one of those traders. You know, this 5-day moving average is very strong so far, especially in the bull market. So we're going to continue to watch as long as it stays above the 5-day moving average. That's, to me, a lot of strength, a lot of bullish strength, and there's no reason for me to short this just yet. My 440 price target is still there. So guys, let's continue to be a bull in this bull market. I'm not saying to buy at resistant level. I'm saying identify good levels. Find where you would like to enter. I like to enter just below the moving averages. In a strong bull trend, like I said, I'm starting to sound repetitive. I like to enter just below the 5-day moving average. I'll wait for that pullback. I'll wait all day if I have to. Be patient, guys. Be very picky about your entry and be very picky about your exits. That's it. This is your money. Risk. Manage your risk. No one's gonna do it for you. Okay. So bottom line, still bullish on SPY. Why? The market is bullish. The charts is bullish. So why not be a bull? Don't fight the trend. Don't fight the feds. Moving on to Triple Q. Hello, Triple Q. Now this is another one. We had the resistance level right here at this. You see this white line right here, the Fibonacci level. Triple Q failed to break it last week. We got this nice, beautiful dip with two strong green Shrek candles. Look like institution are pushing it back up. Got back above the 5-day moving average. Now we got some resistance here once again. I'm not surprised, but then the very next day we broke above that resistance. Now that's 3 days in a row. 3 days in a row, guys, that we have closed above this resistant level. and we are still above the 5-day moving average. Okay, looks very strong still. Looks like it's time, or it's time to continue to be bullish in this bull trend. Okay, let's take a look at the triple Q put to call ratio. And here we go. Bear with me, guys. And here we go. Still have a lot of people buying puts compared to calls. 1.53. So still a lot of bearish sentiment in this bull market. Okay, so like I said, let's continue to be bulls. All right, so stairways up, elevator down. The elevator's not here yet. We're still climbing the stairs. We're going up, climbing the stairs, climbing the stairs. I think we have another leg up. I have the 367 to 370 price target up here. You know, we're breaking above our resistance level multiple days in a row. We're not just breaking above it, but we're closing it. Now I understand there's triple Q also have the bearish divergence, but like I said about SPY, it doesn't have to drop. It can move sideways or just power its way to a higher high. All right, so that's my triple Q and SPY. Our indices, we're gonna move over to a crypto market. So let's take a look at this daily chart of Bitcoin right here. So been saying for quite some time now that Wyckoff is following the Bitcoin is following the Wyckoff accumulation. As you can see here, I believe that following this one, at least this schematic, that we are towards the end of phase C heading into phase D. Now, however, I do want to be frank with you guys and let you know that I am looking at it from another chart as well. Now, this is also Bitcoin, still following the Wyckoff, but I have it here instead at the spring and after the test. I have it here at ST in phase B prior to phase C. Okay, so in this one, I have Bitcoin still in phase B. We need to see it head up to the back to the AR level around 40 to to 41K level back up here. Now if we go check Wyckoff, here it is. So if we following the first chart, the chart that I've been showing you guys with the spring and the test, we should be around here entering into phase D very soon with this big explosive move. However, if we're following the other one where Bitcoin is still in phase B, we should be here. Still expected a move to the upside back to the AR level. So either way, should be a big move coming for Bitcoin to the upside if Wyckoff accumulation continue to unfold with Bitcoin. So will it? I think so, but which one? Are we in phase B? Are we in phase C? I'm not sure. Okay, it looks like we're more likely in phase B. Okay, and that's what it looks like, but I want to lean more towards this one. This is the one I've been showing you guys for quite some time, and the reason why I'm leaning more towards this section of the schematic, that it's in phase C heading to phase D. Now if we head to my Discord, I posed this for my members. This is the LSR, the liquid supply ratio. According to Glassnode, even though the price action of Bitcoin has been chopping sideways, the strong hands have been accumulating. You see, guys, it's accumulating. So while we are over here being scared, because there's extreme fear in Bitcoin right now, pretty much the whole crypto, the big players are adding more. They're accumulating. Okay, so I say to you guys many times, why not follow the smart money? We want to make money. Why not follow the smart money? Retail traders have a 95% failure rate. Why do we want to follow them? I don't think we should. Anyways, look where Bitcoin dropped. It dropped down to our area of liquidity. Got these support levels right here that got set up by the market makers. Got it right here as well, which I did not extend all the way, but it is here, and it dropped just below it into our area of liquidity. Now this level is also a support level. I'll show you right here. If I add a line there, you can see we had a bunch of closes here and a bunch of opens. Okay, so Bitcoin is at a very critical level. I think we will go up. All right, I'm going to continue to say that we are bullish. Why? As long as support levels, critical support levels, we have critical support level around the 31 to 30K level. That's very critical. and Bitcoin is just failing to break below that. Look at these strong wicks. Okay, now the price action is bearish. I get it, but as long as it's failing to break a critical support level, that's also bullish. Okay, not to mention the whales and big players are buying more. They're accumulating more, guys. So, like I said in yesterday's video, and I'll say it again, why not follow the smart money? If the big players are not worried about the volatility and the choppy price action, why should we? We shouldn't worry. Let's keep our conviction strong in Bitcoin. Okay? This is not the first time Bitcoin dropped like more than 50%. Okay? And I'm talking about from all-time high, all the way up here, and dropped like 50% almost. It's not the first time. Bitcoin drops 20, 50% many times in the past. Go back and check the charts, guys. And what did it do? It recovered to new all-time highs. I believe it will do the same. Guys, I hope this technical analysis was able to help you guys out, give you a good perspective, and let you see like, hey, Bitcoin is the future. This is not going anywhere. So come on, guys. Let's be long-term investors with this. Good luck, and I'll see you soon.